Hi students, today a new topic 4 from our unit 3 here, balance of payments. Okay, this topic contains structure of Australia's BOP and concept of current account balance, recent trend in Australia's current account, structural and cyclical reasons for current account deficit and differing views to the significance of Australia's current account deficit. So when we look at the concept of balance of payment, it's an economic transaction between Australia and the rest of the world in a particular 1 year. Okay, it summarizes how resources flow between Australia and trading partners, and it also indicates the health of the open economy. Okay, the concept here is whenever money flows into Australia, we will record it as credit. And if there's money flow overseas or funds sent overseas from Australia, then we will record it under debit. So we can look at it in terms of import and export. Okay, so when you export, you gain revenue. So there will be money flow into Australia. And then when you import, we actually spend our money to overseas, right? Then it will be outflow from Australia. The structure of balance of payment, we can divide it into two main accounts. One is current account, the other one is capital and financial account. Okay, so our current account consists of balance of goods and services, net primary income, and net secondary income. Okay, for our balance of goods and services, okay, it's the export and import of goods and services. So if we receive or there's an inflow, we record it as a credit. And if you are making payment for your import, then we record it under debit. Okay, so in this case, if our export is more than import, okay, we consider our balance of goods and services is surplus. Or if our export is lesser than our import, then it's a deficit. Okay, BOGS is short form for balance of goods and services. We can also call this as trade balance here. Okay, next component in our current account is net primary income. Okay, it records earnings or return on investment, such as dividends, interest, profit, wages. Okay, if Australian invest overseas, okay, and then they receive these dividends or interest, we record it under credit entry. Okay, if foreigners have invested in Australia and we have to actually pay them the dividends or interests, then we record it under debit entry. Yeah? Okay, our next component is net secondary income. Okay, this is a smallest component. Okay, it's a non-market transfer, is one-sided transaction. For example, when we provide aid or help to another country, from one country to another country, then it will be recorded under net secondary income. So usually it doesn't bring us any return. Okay, it's like one-sided transaction only. Okay, so our balance on current account now consists of balance of goods and services, net primary income balance, and then net secondary income balance. At all three components, we get our balance on current account. Okay, next we're going to look at the capital and financial account. Okay, it records all international borrowing and lending transaction of Australia's private and public sector. Basically, it's an international investment transaction. Okay, we can consider it as financial assets and liabilities. The capital account consists of two sub-accounts here. One is purchase and sale or acquisition of disposable of non-produced, non-financial assets. Okay, this is like intellectual property, royalty that we pay for franchises. Okay, like trademarks will come under this sub-account. Another one is capital transfer, okay, where we have conditional foreign aid grants, where you have to pay back, or we have any debt forgiveness, debt was given, then we forgive this debt, we can record under capital transfer. Migrant fund, when we are migrating to another country, the person who migrating, they bring over their funds, right? So this is called as migrant fund, yeah? So these two subsection under capital account. Okay, under financial account, we have direct investment. Okay, this direct investment basically, if we have more than 10% of ownership or shareholding in any particular companies, so we record under direct investment. We can call this as foreign direct investment also, yeah. Okay, the second subsection is portfolio investment. Okay, this is the largest item in our capital and financial account. We can include all our debt, loan, shares in our portfolio investment. Any type of shares less than 10% ownership, we can record it under portfolio investment. Okay, a debit increases the assets, and if there's more credit, then it increases your liability. Okay, besides this, we have three more subsections here, financial derivatives, okay, future or forward contracts, other investment like non-tradable loans, deposit with banks, trade credits, and lastly, the reserve assets. This is what the central bank holds in terms of foreign currencies or golds here. Like for Australia is the RBA, Reserve Bank of Australia. So capital account added with our financial account, we can get balance on capital and financial account. Okay, besides that, we have net errors and omission because this is to do with statistics here. So we can encounter with some statistical errors. So we have to do statistical adjustment, okay, to make the balance of payment balance, okay, in case if it's imbalance. Okay, so your balance of payment always have to be 0. So that means your current account plus capital and financial account. And if there's any errors and omission, we add, make adjustment, it should give you 0. Okay, the linkages between your current account deficit and KAS here reflects capital and financial account. So this current account deficit and capital and financial account has the linkages. Okay, the first linkages here is in terms of direct investment and dividend payment. See, for example, if we have more inflow into our direct investment, right, we will record it as a inflow under financial account. So, but if we receive direct investment, our capital and financial account, KAS, will be surplus. But at the same time, we have to pay our shareholders or investors the dividend, right? So the dividend payment will increase. So when dividend payment increase, what happen here is we have to debit in our net primary income account. So there's more outflow here. So making our net primary income worsen and our current account become deficit. Okay, another linkages here between foreign debt and interest payment. The same concept, let's say we are receiving more loans or we have more debt, okay, we will record it as inflow or credit in portfolio investment. So that causes our capital and financial account to be surplus, right? But in return, let's say you have taken a loan, we have to pay interest payment. Okay, so when there's a payment, we record as debit in net primary income, and net primary income become worsen, causing current account deficit to be worsened as well. Yeah. Okay, another linkages is between foreign direct investment and import. Okay, when we have more direct investment, means more credit into our direct investment. Okay, it gives surplus, or it contributes to surplus in capital and financial account. Okay, so this direct investment mainly we have brought in these shareholders or the investment, right, for expansion purposes, right, to expand our business, right. So they might actually import some capital goods from another country. So this causes outflow in our BOGS or trade balance. So BOGS or trade balance become worsen, and current account deficit will become worsen as well. Okay, so here what you're looking at is exchange rate movement. Okay, see our exchange rate here, we have demand for our currency, and also it relate with supply of our currency. That means DD here, demand for AUD, SS reflects for supply of AUD. Okay, so the relationship here is whenever there is export, when other countries are buying from us, in other way, Australia is exporting, right? So the demand for AUD will rise, okay, causing appreciation here. And on the other end, if we import more goods from another country, then we have to supply our AUD. Okay, when we supply our AUD will depreciate. Okay, so besides this, also when we have income inflow and outflow. So whenever there's income inflow, right, this will gives us more demand for AUD, and when there's demand outflow, it will cause supply of AUD to increase. So this is how our current account deficit and capital and financial account got balanced. Okay, so that's all for the first part. Thank you.